In today's video, we're going to take a look at gold. We'll look at gold through the GC futures, the GLD ETF, along with the miners as well to see what patterns do we see inside of gold. Now, why gold? Why are we having this conversation in the first place? Well, gold caught my attention today initially because of the volatility we saw in the latter half of the day. Let me show you what I mean. So if we take a look at the GLD ETF here, take a look at the sell side activity that really started around 11 a.m. Pacific. So 2 hours left until the markets close. And this is where GLD has, I think, a majority of its next leg down lower when we expected to see a leg up higher. So it's what we didn't expect to see, but instead saw instead is the clue in this entire picture. Now, GLD breached our daily volatility box models. That's what we see happening down here. And we closed inside of this zone at the edge setup into the final hours of the market. So GLD right now is signaling that we're towards the lower end of our volatility box zones where we should be looking for a bounce, a move up higher. Now, if we come into the daily time frame chart, I've taken the liberty to project some Fibonacci levels. This is using some swing highs, so this is October of 2024 to November of 2024. I also use this year's swings, and these are the recent swings which are really encompassing current price action. If you were to take all three of those swings, we get these levels down here, which really tells us, okay, whenever we see GLD sell off, from its high, at least recently, we've seen a sell-off that's somewhere in the, let's call it, 5.5 to about 8% range. As of right now, we've only made about 4.8 of at least that bare minimum 5.5. The first level I'm looking at for GLD is 289.53. Now, the other thing that stands out in GLD is the amount of squeeze arrows that we see, which is another thing that caught my attention. We have 1, 2, and 3 slingshot squeezes, and we have one momentum squeeze, the squeeze signal. Now, what this means is we have a squeeze that's been building up for quite some time now. If we take a look at this squeeze has been building up ever since June. And right before June, we had it briefly fire. But if you take a look at what price action actually did, it doesn't feel like the squeeze fired. So I would call this a very long squeeze that, quite honestly, has been active since about May of this year. Now, which direction is this squeeze going to go? The arrows all signal to us bullish. However, let's take a look at some actual backtest stats to see, are we going to actually see that bullish move? Now, if I load in our bull slingshot squeeze indicator, and I'm going to load in 20 years worth of stats here, we can see that whenever we see this yellow arrow, this yellow signal, typically 14 winners, 3 losers. Now, this trade closed out when we saw the squeeze fire. So this one is no longer active. It just gives us some context. It tells us that this one has already fired, this previous squeeze arrow. So all that's active is this blue arrow right here, which is our squeeze signals indicator. And by the way, for all of our Volatility Box members, these backtesters are included for free with your Volatility Box membership. They're built in the squeeze course so you can understand how to build them yourself as well, which I think really helps understanding how to use the tools. Now you take a look at the stats for this blue arrow, same thing, we're looking at the max available data, 10 winners, 4 losers. Average winner, 2.12%, average loser, minus 3%. As of right now, the squeeze has yet to fire short. The squeeze is still very much just in its chopping around phase. So if we do score an entry somewhere in this 298 to 290 zone, while the squeeze is still active, I think that's a phenomenal way to try and play this still active squeeze signal, looking for a move up. That would also be a nice opportunity to enter towards the bottom end of what I think is this chop. So that's the squeeze inside of GLD, where it started off. And if we take a look at the GC futures, you'll see a very similar idea here. We get some more stats as well. And inside of GC, the slingshot squeeze has yet to fire, so we have some additional stats that we can also use. Here, once we let all of this data load in, 22 winners, 13 losers. We have a lot more data points. Average winner and loser are about the same. And if we compare this with the slingshot squeeze, see if we continue to maintain those same bullish stats. 21 winners, 16 losers, but the P&L graph very much negative here, suggesting that the squeeze we would expect to not have a lot of legs firing long. So with all of that in mind, I'm waiting for a greedier entry inside of GLD. I'm looking in particular for somewhere inside of this zone, and I think we will have a second round of something similar to what we saw today with the stock volatility box models, but with a better entry using both the daily and the hourly models for a bounce up. So if I was to recap this, and actually before we do, let's also look at GDX. GDX, the one thing that stands out to me is we're still around the market pulse, but this bearish momentum that we see on this current bar with the momentum cross, if you were to come into the weekly time frame, the weekly time frame to me is screaming that we are long overdue for a pullback to the market pulse, 46.58. You take a look at some of the individual stocks, NEM, also a little bit of ways from the market pulse. Doesn't necessarily look bearish, but there, GLD's chart looks like a pullback, at least on the weekly, overlaps nicely with the market pulse and would be a better entry than I think taking a preemptive entry looking for these signals to fire. I think we will have an opportunity in this 298, 290 zone, and that's what I'm waiting for inside of gold. I hope you found this video helpful for those of you looking at the commodities as we navigate this current volatility in which a lot of stocks are getting stretched, and we're also seeing some really nice opportunities in other markets outside of just equities. Take care, and I'll see you in the next update.